The way you moved to a different state for every role you had in the past shows that you know exactly when to grasp opportunities right away. And you know that if there's a great founder that came, you are gonna get that founder into the team right away. And now you started Start Equity Ventures. Mohammed, welcome to the podcast, man.
Jiang, thank you very much for inviting me here. Really excited about your podcast and being here.
Let's go back to really a start of your journey. What was the first time you really had exposure to venture capital? Was it when you were investment banker?
So, my first exposure to this was, I would say, investing in general. I grew up in this space. My father was an investment banker, worked in the foreign currency divisions for many of these international banks. And so that kind of it was ingrained in me, right? Growing up, I was reading the Wall Street Journal, right, and that was kind of like my pastime, kind of go to. And then really the what opened my eyes to venture capital or even the startup space was back in the early 2010s when just as I finished my graduate degree, I started to really see the trend in startups. At the time, I was working at EMC and breaking into the EMC consulting division, and we were exposed to a lot of the investments and acquisitions that the company was making at the time. That really triggered a lot of, intrigued me, and looking at the talent, the products, the innovative products that were coming out of various places across the US and internationally. It just inspired me. Like, I love the talent that would come with it, the innovation, the various products, and we were in charge of some aspect of the strategy around integration. Right? When you look at a company like EMC, it's a large company. Those founders started out in Boston, right? And they really ushered in a lot of that innovation in the Massachusetts, Boston area, right? If you look back at their history. So it was ingrained in the culture to really support innovation, invest in innovation, and that translated into the way the company operated and where they looked for talent. And that really kind of imprinted on me, right? And it got me excited. So I kind of like moved from one department to another, and eventually got into the consulting space where we got involved, and were hands on in supporting the acquisitions and integration of those companies.
Yeah, it really sounds like ever since, you were younger, you really enjoyed this environment that your dad kind of put you in, which is like, hey, what is the world of finance doing? Like, what are these numbers? What is like ways that I can really ingrain myself in this? And it was like, you were obviously a young kid. You probably didn't actually like knew what you wanted to do, but like subconsciously it was just like you reading this Wall Street Journal, and you're just like reading all these finance stuff, getting interested, and then you went into investment banking and then also consulting. Also, EMC is huge, so it's like you got tons of awards at EMC as well, where it's like you were really ingrained in that culture, and that culture is where it's like, okay, startups are amazing, and you really found uh, a way to get into a deep dive of that culture, and that's how you knew that, okay, venture capital, that sounds amazing. So from this point on, all the way to your journey right now, could you talk about that?
Yeah. So really, it kind of it was an organic and development. It was almost like an evolution, right? Um, Joe. So I didn't just wake up one morning and say, you know what, it's going to happen, right? This is it. When I was at the Harvard Innovation Lab, this is back in the 2010, 2011, the whole startup space started to really open up and unravel to me. And I met this one guy in the VC space that really inspired me, and it was just incredible how they were engaged in the ecosystem there. But one thing he said, when I asked, "Hey, how do I get into this space? Like, how do I get into venture capital?" He said, "Go found a company. Go start a company, right?" And so I was like, actually, that's a good point. But again, there's a challenge between having a full time gig and doing a side hustle. And I tried that for many years, and it was tough, right? The whole side hustle evolution, if you will, is becoming more commonplace now. And now, as the newer generation comes in, they're coming in with not that much overhead, not that much cost and expenses, and like, you know what, I can do that. That side hustle can be my full time gig, because me and my friends can all come in, share our costs and living expenses, and get an idea launched, right? Get it off the ground. And there's room for risk, right? When I got into the startup space, it was, I got a family, I got kids, right? And that's always a challenge. So that kind of inspired me to really take a step back and say, what can I do, right? Someone who works in the corporate world, and I said, you know what, maybe one angle here is I can provide advice and support these startups in a way that helps them with the enterprise perspective of how to engage enterprises, how to support enterprise companies, right? And that relationship started to build. I eventually got to a point where I say, you know what, maybe this is a good time, right? When I start to have the financial capability to start investing, and that's where I really start to break in a meaningful way, is to start making small investments into these startups, right, and building that relationship with the founders. And so that kind of was the point where I would say in during right before COVID is when I started to really push the envelope. Again, you back then, access to startups wasn't as easy or accessible as it is maybe today. You have AngelList and you have Micro Ventures, you have all these other companies, right? All the other platforms that provide that access. And I think what helped was really doing a lot of that research, just going on and trying different things, looking at different syndications, learning about the GPs and the syndicate partners. And I did through trial and error, right? So I kept them going through it. I didn't know anyone in my network that had that experience, and those that had the experience outside the network, it's not easy to build that relationship, as you can imagine, right? Like, look at what you did, right, Joe? You reached out and you explored and reach out to people outside your network, and that's not easy. Some people are just not comfortable with going outside their network and the people that they know to ask for help or to ask for advice or guidance. So you have to be comfortable with that. You get a lot of rejections, right? But the outcome is you start to learn more, right? You learn more about yourself, you learn more about others and about other industries. And there hasn't been a time where I've asked someone for a few minutes to learn more about what they do and have them reject that. People generally are very helpful to that end.
That's the amazing part, where it's like back then, we don't really have as much resources as we do now. And even then, every single era is the same in the way where the people who have the most initiative, the people who just like goes out and do things regardless of the rejections, they are always the people who are, putting themselves in the right environment to really just succeed. And it sounds like, through all your roles, GTM, business development, consultant, investment banker, you really had that overall view of exactly how the number side and also how the people side work for finance. And what would you say, as in like which role, investment banker, consultant, GTM, business development, which or founder, which had the most transferable skill to VC right now?
So that's a very good perspective and point that you raise. One thing I learned is you have to have that motivation inside to want to continue to learn and expand and do new things. You have to be comfortable with doing things that you don't know how to do, and you learn, right? And I think just my journey from finance and investment banking and into the technology space from a business perspective, and then working in the technology, working in various departments within companies, and understanding the entire value chain of how hardware or software companies go from the raw material, whether that's actual hardware raw material or software, IP, right, development, and taking that through all the way to the customer. I think having the openness, open mindedness to say, hey, you know what, I want to learn and I want to understand and be willing to listen. That is, I think, the key. It's all of the above. It's all these different areas and learning and understanding and getting exposure to these various businesses and sectors and departments within these companies is what led to me having, if you will, that transferable skill set, right? And I think one of the big ones is learning how to deal with people. You have to be a good people person, right? Because one of the main things in the VC space is building that trust and credibility, right? You have to be able to gain people's trust by delivering on what you commit to and being open and transparent. And I think that that's a key thing. It is a people business, right? Especially when you're dealing with money, you're dealing with founders and technologies and folks who have, who are bringing products to market that they feel passionate about. It's a very personal thing when it comes to some of these founders, especially the exceptional founders. They're building things that they have a strong connection to, right? And you'll see the founders that really succeed, they're trying to solve a problem that impacted them personally.
And it's kind of like Mohammed says, where people think that one role really just like is the most transferable, but it's not really that case. Where VC is really just like you have to be a people's person, and if you know how to network, if you understand which talent to look for, then you're really like set. But reason why they usually have consultants, investment bankers, is that they can already see that they will put in the work. And that's like one of the most important parts why, usually you can become a VC after an investment banker. It's like stuff like these where it's just easier, but regardless, if you really do have that skill, that people skill, people want you. VCs, partners will want to hire you. Could you talk about what was the hardest part when you started your fund? What was the hardest parts the first few months in?
Yeah, so I'll say the humbling part of starting a VC, it's like starting a company, right? You really, it's like, especially when you're getting into space that you don't have all the pieces figured out, right? And it becomes very humbling quickly. So fundraising, operations, compliance, right? It really is like building a startup, but it's that funds other startups, right? So it was really balancing. You had to balance, storytelling, LP storytelling with the, executing on deals, sourcing good deals or good founders. I hate to use the term deals, but because it's a people business, looking for exceptional founders, right? And then having and then building that relationship, building the trust with the founders, because the exceptional founders are not easy to find and are not very accessible, right? Because it's a relationship business again, right? So really building that trust by showing ability to pick those winners was alongside kind of building our brand and kind of building that connection and with our investors and founders.
Like Mohammed says, starting a VC is really just starting a startup. You have a small team, could be you and a couple of other partners, maybe some advisors like Mohammed, and then that would be really it. And then you have to really find these exceptional founders, these really really good OPs who would just invest in you. So for Mohammed, did you get your capital first, like finish raising your capital first, or did you have to like set up the entire fund and then you weren't even sure if you were going to get the capital until afterwards?
No, so we started by getting commitments, right? You have to go out there and get some commitments, and so that was something that we really focused on. Hey, can what can we actually raise, right? And then once we got that, we decided to launch the fund and go through that process.
You recently hired a partner, Jabs, who recently joined, and he says he joined to combine his passion for strategic investments with a commitment to fostering positive societal impact. Could you talk about how, you guys, the partners, choose each other and how this fund really came together? Like, how did you guys meet? And then, how did it come together to fill any gaps that are needed to run this fund?
Yeah, so that's a very good point, and I think, like anything, selecting your partners, it's something that has to be done with care. Uh, like I like to say, your partners and are you have to pick people that fill your gaps, right? Um, so each one of us has a different approach to things and a different perspective. So if you look at Jabs, he's a person on our team that really is big on the investor relations, right? So he's got also a portfolio of investments that he's made in the past. Great people person, and has many years of experience in fund management. And so we found Jabs to be strategic in being our investor relations partner. Imran, many years of experience in the technology space, services space, understands go to market, key in helping with the scalability of our portfolio companies, right? So he fills that piece. And both Imran and I kind of complement each other. And I also then bring kind of the aspects of the finance space with also experience in technology and investments in startups. So we all kind of there's overlap, and we kind of complete one another from that aspect. And that's why I say, when you're looking for partners, to support you on this journey, you got to look for people that you can trust, right? And that's something that you build over time.
And did you guys know each other beforehand, or was it like an interviewing session and
No, no,
then
we knew each other beforehand.
every single one of you?
Yes, yes. So I worked with Imran for many years at VMware, right? So him and I knew each other. We're in the trenches together, right? So we each knew our styles of work, right? And that relationship kind of built over time, right? I would say like a good, 8 to 10 years, right? So and that's key, right? I'm not saying you have to wait that long, right? But you have to have that foundation, because God only knows the stress and the long hours and the pressure of raising capital and deploying capital and managing the portfolio it takes a toll, right? So you have to be in it for the long run, right? This is not an overnight, success stories, right? These are things that you're investing in that have a 5, 10, 15-year outlook.
Yeah, and for our audience, just like Mohammed says, when someone starts a fund with a bunch of people, you guys could be all partners, but these partners, what the LPs are looking for is that you guys have to have a minimum of, 5+ years of relationships to really just like trust that, you guys actually know each other, can work with each other, and you understand like what exact gaps you're filling in. So that's what they really cares about the most if you're trying to start a fund. I know you mentioned, it could be long hours, tons of stuff like that. So who is VC not for?
So if you don't have the patience, right, you don't have the stamina and the long-term vision and outlook, then it's not something that you're going to see rapid returns on. You're not going to see an immediate return on your investment, right? So you need to be in it for the long run, the long game, right? And if you have to be someone who knows when to get involved and when to take a step back, right? And I say that with respect to the portfolio companies, right? From our investment perspective. So you have to be able to gauge people, right? If you're not someone who has that emotional intelligence, right, you need to know, right, certain things and be able to navigate that. So I would say stamina and patience, right, are key.
Yeah. And that's kind of similar to a startup in a way where, you gotta have tons and tons of stamina and you've got to really hire the A players, the best people. And in your case, as a VC, it's like the best founders. And it's really, really hard to find them because, the best people are usually kind of obscured, kind of like outliers that you guys really invest in. Could you talk about, with stamina and stuff? Like, could you talk about a day to day in your life or week to week?
Yeah, I mean, I would say day to day, week to week, our the way we drive our business here is, we would spend our time between investors, managing our investors, managing our portfolio, and looking for talent. right, to support our portfolio, right, and looking for the next round of founders, right. So it was like building that relationship. Some of the companies in our portfolio, we've known the founders for the last, 2, 3, 4 years, right, before we made the investment. And so that's kind of the way our day to day, week to week kind of operates when it comes to our fund. I say it's a juggle between working with your customers, our investors, and then working with our portfolio companies.
Yeah. Could you give an example of like maybe like a small routine that you do? Like I wake up at 8 a.m. and then 9 a.m. I go to like meetings and then, or is there nothing like that in your days?
No, so no, there is. I probably wake. So I wake up. My day starts at 4:30 a.m. Right. So I have my own like religious rituals. They do some meditation, right? I'll go pray, and then start the day to get some sanity, right? So my day starts very early. Get back, get the kids to school, and then I'll start at 7:30, 7:30 after the kids are out the door, and that's when I kind of take a look at what's our strategy for the given week, month, and outlook. And then I kind of look at the day, and I'll have calls with investors. I'll have calls with my portfolio companies, looking at future opportunities of investment, right? Looking at pipeline of founders, right? So that's kind of the way the day goes. I do have to start my day with my cup of coffee, right? I like my cappuccinos, and so absolutely. So in the morning, I do all the things that needs the heavy lifting, right? To have the all the stuff that I need to focus on, and then in the afternoon, I'm pretty much done by 3, 4 in the afternoon, and switch gears in the evening, another routine, but go out for a walk, clear my mind, right, and then spend time with the family in the evening. But yeah, and that's how kind of the cycle goes.
Yeah, and it's like, the best leaders will always, whether it's in morning or at night, they always have like a couple of hours where they could just like lock in, like just focus, and they would be undisturbed during that time. And it's like Muhammad, he would just wake up at 4, does his prayers, does his morning routine, and then he goes and strategizes, make sure that he's meeting his goals, maybe setting his top 3 things to do for today. And then everything else, after maybe like 9 a.m., then the founders would start calling and be like, hey, can I have help with this? Or, it could be the founders meetings or just like stuff that just like comes up. So the great leaders will always have like a couple hours just where they're not really disturbed. They can really do their own thing. And I personally found that it really, really does help. So for our audience, definitely, definitely try to do something, a routine like Muhammad's. Could you talk about when you invest in founders, when you invest in startups, what is the top 3 things that you look for?
So very good question, Joe. When it comes to looking for, who are the founders I look for, I'll go someone with grit, right? Someone who has shown the ability to go after something, right, and go after it with passion, right, and with full focus. They got to be someone who's works from a purposeful mission, right? They have to have a purpose. And the best founders, when you look at and you peel back the layers, you'll find that there's something much deeper that's driving them. And that only comes out when you build that relationship with that founder, right? Understanding where they came from, where they're at today and where they intend on going. This helps in really picking out those people that you can entrust with your investors' money, right? Um, so I would say that grit and integrity, right? What was their previous experiences, their previous companies they've launched? What was their relationship with their investors? What was their relationship with their customers? And that kind of you can pick those things out, right? Through conversations and building that relationship. So the grit, of course, integrity and the will, right? And I think these three come together to build that culture, right? If you look at any startup, they got to have the product, yes, right? They have to have the right. They have to have be able to attract customers, attract talent, and those two will attract investors. So when you look at what attracts customers, well, a great product, right? What attracts talent? A great culture, right? If the founder doesn't have, like I said, the grit, integrity, the passion, the will, right? Then they won't attract the talent to support the customers and the vision they have.
VCs, especially in the earlier stages, they're really just investing in the people. So if you have the grit and if you have the will, and then on top of that, if you really do have that honest view where it's like, okay, I have failed in this, but here's what I'm going to do. And I'm really, really excited to just like do it better. And especially, I mean, for founders, like if they're second time founders and they say that and they already know like how much work they have to do that puts into a startup, then yeah, you're gonna be like, okay, these guys are pretty good. And those are people that you really, really do want to invest in. Could you talk about maybe on how do you maintain these relationships with the best of founders or with like high net worth people?
Um, Good question, Joe. One thing that I found throughout my career is being able to go and reach out to people outside your network and outside your circle, right? And traveling, right? Traveling helps a lot. When you travel, you meet new people, you get to learn new things. It trains that muscle, right? It helps you build that skill set, right? And I think these are all key to building those relationships, whether it's with founders or investors, with customers.
And that really important point that you kind of said, traveling is a really, really good way. I know that you and me both, we really do think that the best way to learn is hands-on, where it's like if you just like start, like 50% of the people would never start. If you just start and iterate, once you iterate on anything, I'm personally a perfectionist, so if I iterate, I just like iterate like crazy and make sure that I deep dive it. So it's like you really, really do have to be hands on. Is there anything else that specific that you do to, let's say, like, okay, so you met like a high net worth person and then you want to maintain the relationship? Do you send like quarterly newsletters about your life or is there quirky things like that?
Yeah, I'm transparent, right? So I've taken an approach where I've invited my network to a WhatsApp group, right? And that's how kind of where we started. We launched a WhatsApp group back during COVID, right? And that WhatsApp group developed into opportunities to invest, to syndicate, and it was really started. And let me go back to the beginning, where what kind of brought on this idea of launching a fund was that I had invested in several companies, around 20, 25 startups over the last 5, 6, 7 years. And what I wanted to do was I wanted to give back, right? And I wanted to share this with others in my network. And so that's when we launched the WhatsApp group. Chatted with Imran and said, hey, I think we need to like get others in our network, business owners, service company owners, tech company owners, right? Physicians, people in our network to open up their portfolio and give them access to this asset class, right? To startups, right? And I say asset class because high net worth individuals look at their portfolio in that fashion. They say, okay, I've got real estate, I've got equities, I've got precious metals, right? And then I may have some brick and mortar business, and then you have a slice of that into startups or venture capital, right? And a lot of these folks, because they're not in this space, what happens is they end up getting burnt, right? They invest in people because they just don't in companies or with folks that may not be the right person or the right time or the right fit, right? There's even a concept of as becoming it's becoming more prevalent is having even investor founder fit, right? Like you have a founder product fit, right? Like a product market fit, you also have a founder product fit. You may have a great product, but you don't have the right founder, right? Or the right founder, but not the right product, and that happens also. But When you build that relationship with the founder, that founder will go on to the next thing and will remember, oh, you know what? Let me go back to Joe, right? He was a great angel investor, right? Or let me go back to Mohammed. I liked that relationship, and I can continue that. I want to bring them on board on my journey. That's the value of having that relationship. Craig Zingerline, who sits on our advisory board, right? He was a person I invested in 4 years ago in his startup, right? Now he's part of the fund, right? That's the relationship, right? The power of the relationship. So going back to what you were mentioning earlier, it really comes down to that piece of kind of building that value and building and evolving. So we took that, we launched the WhatsApp group. We start to build that trust with these investors, the people, friends and family in our network, and then that expanded. They invited their friends, and now it's over like a smaller group, but there's hundreds and hundreds of people in that group now. But the point is, we were transparent. Anything that we came across, we said, hey, this is what we did. This is what we're investing in. Go ahead. You can go and invest in it yourself directly. We didn't, at that point, we didn't syndicate. We didn't do any of that. What happened then was a lot of the people in our group said, you know what, we don't have the time to do this. Can you do this on our behalf? Right. And that's how that developed. Right. So we syndicated, we did multiple syndications, right? A dozen or so. And then that kind of developed into the next thing. And when I syndicated, I'd met at the time a gentleman by the name of Sharif Nassim, Jadar Capital, and we co-syndicated, right? So we went into a few of these investments overseas, right? Companies in Bangladesh, in Nigeria, in Pakistan, and we made those investments in collaboration. And so that kind of developed. Again, this is building your network, right? The power of like being open to explore and being open to connect with others outside of your direct group of people that you may know in your neighborhood, your social circles, or your corporate network, right? Um, and then that led one thing to the other. That kind of led to the next thing. And every time we made an investment, we would educate and share that with our investors, with all our high net worth individuals. So what they saw was, oh, okay, you guys are not just investing and keeping your updates to yourself and telling us a year later what's happened, or 2 years. No, constantly being transparent, being open. And that's how our fund even works today. It's not a blind pool. It's open to investors to see the updates, to see the progress for themselves. That's the kind of relationship we have with our high net worth individuals and our investors.
And people might think that, if they just like stay guarded about their information, then they're just gonna make it, amazing. But then it's like if you just tell everyone about how to do it, or even like teach them exactly the way you would invest, most people would not even like do it themselves. They would actually just like trust you a little more, a little more, a little more. The more you send them these, the more you teach them these, but then they won't do it themselves. But that trust stays, So once that trust stays, they're gonna be like, okay, so this guy seems like he knows what he's doing, and I trust him because he's teaching me all his methods. He's being so open. He's being so transparent. So like Muhammad, he must be a great dude. Why don't I just like I have some fun. Why don't I just like let him invest it for me? And I definitely trust him. I know he's gonna make some returns for me. So it's like this transparency factor about you, which is really really good. And other than that, I think I noticed where you're like you also invest in international startups as well. So it's like I think traveling is also one of your little unique traits where it's like, you know, you really do understand how different parts of the world and also like how everything comes together. So it's like you also have a unique view on the world and how to invest as well. And obviously when you're traveling, you can also meet in person with all these LPs, with all these people, all these unique people that you usually wouldn't find if you just stayed in one small area. So that is also one unique trait about you. I know that you mentioned like you have this WhatsApp group. Is it like I personally know like how hard it is to maintain a group? Like how active does it have to be to create the value that you have created?
So we post quite regularly. Earlier on, we were posting a lot, and then as we started to grow, we found that our posting were very intentional, right? And very structured. So it wasn't just a lot of noise, and we keep it that way. So it's not there's not much chatter in it. It's mainly, hey, here's what we've done. This is what we've invested in. This is what we're looking at. So it's very informative. A lot of these people don't have time to waste, right? They don't want noise. If they see things that are very noisy, what's going to happen is they're going to silent it, archive it, and not be active, right? So the key is you have to be able to help your investors, um, find the signal from the noise, right? And that's what we do. We're very we curate. We're very intentional and specific on giving those updates to our investors, and that's how we manage it, right? And we do quite regularly. From that aspect, it's regular and informative, so they know what they're getting. Okay, oh, I see what we're doing. This is what the fund is looking at doing. They're investing in this. They're looking at that, right? So it's very clear, and I think that's important. And it lends itself to that trust, transparency.
Yeah, so is it by regular? Do you mean like every week? Or is it like, oh, I found a startup that I think I'm 90% gonna invest in. Let me just say like, hey, I'm 90% sure I'm gonna invest in so and so startup because of so and so, and that's like a message. Or could you give like two examples of what message it is and how regular? Like, is it once per week or something?
Yeah, it varies. It could be typically it's once a week we're giving an update, right? Once a week is good. It's regular enough, but it's not overbearing for the folks on that group. And we'll say, here's kind of an update on where we're at. Here's what we're looking at, and it is very clear, right? It's almost when we structure these updates, it's simply this is the company we're looking at. Here's the founder. This is what their traction is. This is what their market, their TAM is. These are the customers. This is the customer feedback. This is the track record, the history of the founders, of the experience, right? What their vision is, and so we break it down into a format that's simple but informative.
Yeah. And how do you encourage, like at the end of the message, like would you write something to encourage the group chat members to network with each other? Or how do you do that?
So we leave that to be more organic, right? And so they'll network with each other, or they'll discuss amongst each other, and we give room for them to chat and to get to know one another. And then there's other requests, right? Hey, one of our portfolio companies is looking for talent, looking for a BD person, looking for an engineer. And so these are other various ways we leverage the network to support our company.
And one last thing on this WhatsApp group. Do you personally approve every invitation? Because you
Yeah.
obviously kind of make sure the person is like credible, maybe even like a Google search or some type of background. Like, do you guys personally approve their request, or is it just anyone can join?
No, of course. No. They're vetted. Every single person that comes on would be someone who's vetted, someone who's from the circle, from our network.
Could you talk about one or two success stories or your most successful investments and how you really met these founders?
Yes, absolutely. So I would say Sully was a good one. Sully AI. I came across this founder January 2024, and like using LinkedIn a lot. And I think LinkedIn has been very useful in reaching and networking with folks across my career. And so when I came across Omar, it was because of my contacts, so my network of people that I know, and um, I found a post on the company, and I reached out. Turned out they knew um, Omar, and I kind of did some research. Who is this guy? What's the company look like? And I pinged him and said, hey, I'm interested to learn more about your company. And we had a conversation, right? And because we had common people that we knew, we trusted, and we had that we both had known for some time. And he told me about his company, right? He told me about Sali AI. It's a health tech company. It's and the purpose and the vision is around one patient, one doctor. One patient, one doctor. And that was near and dear to me because, I think everyone's got some exposure to health, someone in the family, either direct or personally, where they've gone through some challenge in life around health, right? And that was the case, right, with Omar, right? And he experienced that, and he went through an experience, a very tough experience with some close loved ones. And that's what really inspired him to start Sali AI, right? Again, it's that purpose, it's that deeper meaning, right? Because there's going to be a lot of grueling hours, right? Whether you're launching a startup or supporting a startup from a VC perspective, these are grueling hours. These are a lot of time that these founders spend in building this company, and and so um, he told me about the story. He told me about what they were doing, and they were building um, agentic AI tech to support the physicians, right? So physicians can be 100% focused with their patients while the agent is listening, transcribing, and documenting the conversation in a very trust and secure way. And so it freed up physicians. It freed up doctors to be able to do what they love doing, is interacting with the patient and focusing on the patient. Fast forward, at the time, we're still kind of figuring out, and we're still deep into raising. Fast forward, we kept on tracking them. They were pre-revenue, but they were starting to grow. They're still trying, adjusting their product. Earlier this year, they broke a significant amount of revenue, right? Significant enough for us to share with our investors, and folks got very excited. And so that's when we decided, okay, this is the time to invest, right? And it fit into our criteria for investment. And yeah, if you look at where they are now, they've broken 300 healthcare systems, and they're a long way from where they started 14 months ago.
Yeah, and these healthcare systems, all these regulation and all these laws and rules, if they actually break through that, oh my gosh, like the revenue would be insane, the
Yes.
growth would be insane, and the potential would be insane. And even on top of that, it's like Muhammad said, he only invested in the people. So the reason he kind of invested in Solely AI was because on, not only did he have like family member, who was affected really, really much by these healthcare systems, but also, Solia is amazing where it's like Muhammad and them knew the same people. And that is one of the most important point. Because if you know the same people as a VC investor, then that really is an in, at least for founders, really to just like invest in them. And for VCs, this is the best way to know, like, okay, so I have close friends or I have friends who really just like knew the startup. If they trust them, I can trust them because I trust my friends. And that is the most important part, regardless of whether they had anything else. But now that they have great traction, Muhammad's like, oh my gosh, like this is perfect. It fills all my criterias. Obviously, there's no check, bullet points, but it's like in his philosophy, in his mission, what checks off those boxes, really, really in general. And so yeah, really, really just did that. And that's why, they were amazing. And Muhammad really just invested in them. I know that you did Pitch Unfiltered, a demo day, and bonding with founders is the best way for VCs to invest in the best of the best. So, for aspiring VCs, how would you recommend they join these types of events to really just get into the startup world?
There's many events that happen actually in the DC area, or in your local area, wherever you're located. So you just need to go out there and search, right? Whether it's tech weeks, right? You look at Techstars, you look at Y Combinator if you're in the US. Um, there are others that are more regional, like DC Tech Startup Week. That's something that we take a look at. But for the most part, we're focused on, between my partners and I, are focused on investments in California, right in the Bay Area. Well, we'll go really, it's companies across the U.S., but we tend to find that a good portion of the exceptional founders are going to be in that region. But yeah, it's really reaching out and looking at what are all the events that are happening in your area, right? Start there, because that's a good way to kind of build that connection and be able to crack into that space.
Yeah, and it's like Muhammad says, look at Techstars, look at if Y Combinator, or even like big VC funds. If any VC funds have those events, you can kind of see it in their website. It's kind of like Muhammad's, Start Equity. They post their events on their website. So if you want really, really do your research and you want to meet with a specific VC from a VC fund, just look at the events that they post and kind of go to them. Looking ahead, what trends in venture capital are you most excited about? At Start Equity Ventures, your team has over 50 years of combined VC experience. What do you think is being overlooked in the market right now?
So I would say right now, I mean, the three areas is agentic AI. I think everyone's talking about it. We went from 2 years ago, it was like ChatGPT and the various other platforms that are out there, Anthropic and others, Microsoft's and Google's bot and whatnot. We went from that text, and human interaction between ChatGPT and others. Now it's like agentic AI, right? Agentic AI is getting big. I think that's a trend I'm excited about. I'm excited about the crossroads between Web3 and quantum computing, right? As well as robotics. I think those four are going to come together in a very, very radical way, right? I don't think we've seen in history a time where four separate technologies are, each of them can be an industrial revolution of their own, right? Are coming together at the same time. We're going to see a very different world, right? A couple of years from now, right? And it's happening much faster than we've seen in the past, right? Where things would take 5, 10, 15 years, um, and industries and economies were built around that. Now you're talking about, and that's just like under one tech breakthrough. Now we're looking at four distinct tech breakthroughs, and that's going to be um, enormous in terms of the impact that we're going to see. Like the fact that we had, OpenAI come up with in 2023 with ChatGPT, and when 2 years later you had it that get disrupted by DeepSeek for a fraction of the cost, fraction of the power, right? So just think about the speed at which innovation is going to happen now, and the speed at which disruption is going to happen, right? Um, so uh, I think those are the areas that we're taking a closer look, and we're really excited about those trends.
Yeah, and this era is like literally the most amazing. Even if you don't want to become a VC, you know, you can become a founder and a founder of, in these four major revolutions. Oh my gosh, just imagine the potential. The next 15 years would just look so, so, so different from right now. And just like Muhammad says, if you're a VC backing and really supporting these founders to make that change, you are contributing tons and tons to society. I know you talked a bit about how to break into VC. For our viewers who needs an actionable plan to implement right away, what would be your 6-month plan to fully break into VC for someone who could be a GTM role, or it could be someone who wants to start a fund?
I would say like your first 2 months, read into like venture deals, right? Follow some of the big ones, right? Listen to VC podcasts, listen to Joe Jiang's podcast, yeah. And I like listening to All In podcast, 20 VC. Harry Stebbings is great, and so I think those first couple of months do that, and I would say 6 months is pretty rapid, but okay, let's just go with it. Those are the first 2 months. Next, month three, maybe reach out to a few VCs, right? Network with micro VCs, right? Emerging fund managers, right? Research the portfolio, maybe write up some mini cases about them, right? Engage with the partners. And then I'd say month four, start building your personal brand, maybe share some insights, your reflection, right? Your perspective, show the way, show your thoughts and your thinking. I would say month five, attend some events, demo days, right? I think demo days are big. You need to attend demo days. You need to, like, I've attended hundreds of these and listened to hundreds and of pitches, right? And understanding and learning what to look for, what to pick out, right? Some of these syndicates will have demo days where all you get, and that's the format that we have, is really all you have is 7 minutes for each demo, from the pitch to the questions, the panel questions, to the rebuttal, the response from the founder. And that's it. You make your decision. Well, that's it for the exposure you get to what you hear from the founder. Then you go do your research, right? You go do your research, you get the demo, the deal memo, and you look at and read and understand what's going on. So I would say that month five, the demo days, that you need to do as much of that as possible, right? And then month six, set up some in-person coffee chats or virtual coffee chats. Ask smart questions, right? Be curious. Don't ask for jobs, right? And just like be open to learn and get to know various folks in this space.
Yeah. And would this be for the GTM role, trying to become a VC, or would it be to start a fund?
I would say what I shared with you is like around starting a fund, but that 6 month is like very tight. Okay, just take your time, right? Learn, right? And depending what stage you are in your life, in your career, just be cognizant of that. I will tell you, now is the time to invest. There's a lot of opportunity to do great things, and the technology is has reduced the barrier of entry, right? So now founders are no longer limited by their access or their capability, because they can get that augmented very quickly with AI tools and whatnot. So you don't need to start with hundreds and hundreds of thousands of dollars. I'm seeing now startups that are bootstrapping, right? All the way up to 5 million in ARR, right? Companies no longer need to be built, right? Using, millions of dollars to reach a million in ARR or 10 million in ARR, right? You're going to see companies with a handful of people reach unicorn status in the next few years, right? And I dare I say even bootstrapped, right, to that point, right? It's going to happen, right? It's just a matter of time. So I would say spend time in listening to those demo days. Try to join as many as possible. Local, go in person, go virtual. Don't be limited, right, by the location, and just keep exposing yourself to that space.
Yeah. And I personally agree. Like demo days are one of the best ways to really just like learn, and your investor eye, it really develops after attending tons and tons of these demo days. And right now is the best time to invest because, like Mohammed says, the barriers aren't really there's really no barriers anymore. At least for if you have an idea, like an internal, you can even create an internal app for the company easily with Replit or something like that. And then it's like the only thing that really is left is like the complex data infrastructure. It could be agentic AI and really, really complex stuff. But it's like right now, there's so little barriers that there's so much founders to invest in. So if the founders are really, really great, then really send those deals to like VCs. And if they respond back, then heck, that's a little thing for you. That's a little feedback that you're doing something right, and just keep doing it and just keep trudging. Really, really be hands on, like Muhammad says. Always be hands on, learn and iterate. Now for a few rapid fire questions to wrap up, a few words or a sentence. Ready?
Let's do it.
If you could invest in any startup from the past, which one would it be?
I would say Uber.
Uber is amazing. And what is your favorite part of working in VC?
I love the interaction with founders and investors.
What is one thing about you most people don't know about? A little fun fact.
A little fun fact, that's a good one. I enjoy painting.
Ooh. I'm a great painter myself. One place that you want to travel to but haven't yet.
That's a good question. I do want to visit Malaysia. I haven't, and that's one place I want to visit.
Awesome. Is there any thoughts you want to finish or we didn't get to cover on this pod that you would like to talk about?
No, I think my parting thoughts on this is, you know getting into VC is something that really is about um, having a longer term vision. So it's not something that happens if you're looking for overnight, and instant validation or instant or fast outcomes. It's not for you, right? It's a long game, and it's really something that you have to have patience around. So I'd say keep that in mind, and um, keep doing what you're doing when it comes to being inquisitive. The fact that you're listening to Joe Jiang here is the first step. And if you're interested and want to learn more, just keep on researching it, and yeah, once you go down this rabbit hole, it goes a long way.
Yeah, initiative and iterate. That was amazing, Mohammed. For anyone listening who wants to learn more about you or your firm, what is the best place to reach you?
They can reach me on LinkedIn. Happy to connect.
Yeah, and I'll definitely put his LinkedIn in the description below. Out of everyone you know, who are two amazing VCs that you would recommend as future guests to our podcast?
I would say Unlock Venture Partners, Razi Imam, great guy, and Yusuf Khan from Ridge Ventures.
Thank you again, and thanks to everyone who's listening. Comment a question you want to hear from Mohammed or our next guest. If you enjoyed this episode, make sure to press the subscribe button, like, and share it with someone who's interested in getting in the venture. We'll see you next time on Break into VC.